CADJPY formed lower highs and found support at the 88.00 major psychological mark, creating a descending triangle on its hourly time frame. Price is currently testing support and might be due for a bounce. If that's the case, CADJPY could recover to the triangle resistance around 89.00. However, the 100 SMA is below the 200 SMA to signal that the path of least resistance is to the downside, or that support is more likely to break than to hold. If that happens, the pair could fall by the same height as the chart formation, which spans around 250 pips. RSI has some room to head south before indicating oversold conditions or exhaustion among sellers, so there could be more bearish pressure in play. Stochastic is already in the oversold area to indicate that sellers could use a break and that buyers might take over. There are no major economic reports due for the most part of the week since majority of traders will be out on holidays for Christmas. Canada has its monthly GDP up or release, though, and this might still spur some volatility for CADJPY. Traders are expecting to see a stronger 0.8% expansion versus the earlier 0.1% uptick in GDP, possibly keeping loony bulls hopeful that the BOC could hike interest rates early next year. Weaker than expected data, on the other hand, could dash tightening hopes and spur a sell-off for the Canadian currency. Meanwhile, the yen is generally on weak footing since Japan is struggling to recover from the pandemic, and the BOJ is far behind its peers when it comes to withdrawing stimulus. However, risk aversion might still favor the lower-yielding yen if investors continue to have concerns about the Omicron variant and possibly another wave in the pandemic.